60 days to get paid. We've got this, sort of infamous paid when paid or even paid if paid component that's, exists in most contracts between subcontractors and general contractors. And, the challenge here is there are plenty of funding solutions, but unfortunately, the reason we have this big issue is because most of them are not a good fit, right? I mean, there's plenty of money, out there, and banks and investors or what have you. Everybody's looking for a return on their capital. So if there was a solution out there that was sort of a ready fit, I think it would already be addressed. We can go through a couple of them. We've got banks. The problem with banks is that they're typically going to look at the past, right? So if a subcontractor is doing, $1 million a year and has the opportunity to do $2 or $3 million, a bank is typically going to lend on what that company has done in the past. And of course, your personal credit and collateral and assets, of course, play a big role in typical bank loans as well. There's some other avenues. You can borrow from friends and family, or fund your growth on your credit cards, or even take an MCA loan. But none of these things are really sustainable, and I think that's been the problem in the industry, right? You've got this long payment cycle, 60 days plus or minus. You've got a large percentage of subs, as you can see up on the screen now, that are not being paid in full. Almost over half of subs are claim in recent surveys to not have been paid in full on recently completed projects. And it's really limiting their opportunity to grow, right? If there was a capital solution out there that would allow particularly subcontractors to take on more projects, it would certainly help them grow and help them be more successful. So we believe the cash flow issue is limiting their opportunities, and in addition, in creating a lot of additional risk for all the parties really involved, right? A typical sub that's maybe doing $1 million a year in sales, let's just say they're billing $100,000 a month, and they have to have enough capital to carry about 90 days worth, right? So if they're a typical sort of 20% gross margins, maybe 5 or 6% net margins, they've got to carry roughly 90 days. So they're going to have a couple $100,000 in working capital to just be able to sort of sustain that, right? To carry the month they're in, then they submit the billing, and then they've got to, carry the next couple of months while they're waiting to be paid. Some things may mitigate that a little bit. They may have credit lines with their suppliers and what have you. But in essence, they're going to need a couple $100,000 in working capital. And if they're sort of growing very moderately, or they're sort of at a plateau and it's taking them some time to get there, that may be sustainable. But the minute they have an opportunity to maybe do $2 million in sales or $3 million in sales or take on more projects, their cash flow problems are going to increase exponentially. And so the cash flow limitations really limit their growth and create a lot of risk for the project and all the players involved. I don't know if you have anything to add to that, Scott.
Yeah, I think that is a huge misconception, and most of the GCs that I speak to nowadays are, if we have a client that's in our program, they think, oh, if they've got cash flow problems, then they're financially not sound, or they've got other issues. And it's quite the opposite. It's the guys that have more work than they know what to do with. It's the guy, like you just said, they maybe built up a little capital to get them 90 days or whatever, but now they've got an opportunity to do three new projects, and they all start within the next month. Those are the cash flow issues that we're solving. The guys with the opportunity to grow and take on more work. So I think that's a big misconception of the cash flow issue.
Right. no, absolutely. Yeah, it affects everybody from the supplier all the way up to the owner, the banks. I mean, everybody's concerned, right? The banks and the owners, they want, the unconditional waivers every month, but of course the sub can't pay the supplier typically until they've been paid. So then there's this sort of, game of cat and mouse, and everybody in the meantime is trying to protect themselves and understandably mitigate their risk. And